High inflation in the U.S. started in 1916, driven by World War I. European countries bought massive amounts of American food, metals, and cotton, pushing exports and production to record levels. The Federal Reserve expanded credit to support this boom, which increased the money supply. As demand grew faster than supply, domestic shortages appeared and prices for everyday goods rose sharply. After 1921, U.S. inflation turned into deflation. With World War I over, European production recovered and demand for American goods collapsed. Exports fell, banks tightened credit, and the money supply shrank. The post-war recession of 1920 to 1921 reduced wages and consumer spending, pushing prices down even further. The Great Depression began after the stock market crash in October 1929. Banks collapsed, millions lost their savings, and businesses shut down. By 1933, unemployment reached over 25%, and production had fallen by nearly half. The crisis lasted through the 1930s until government reforms in World War II finally revived the U.S. economy. From 1941 to 1945, U.S. inflation rose sharply due to World War II. Military spending surged, many consumer goods were rationed, and wages increased, pushing prices higher. After the war, 1946 to 1948, inflation remained high as price controls were lifted. Returning soldiers boosted demand for housing and goods, and factories shifted from war production to civilian products. Prices soared, reaching some of the highest levels in U.S. history. The Great Inflation began in 1965. U.S. government spending soared with the Vietnam War and new social programs, while the Federal Reserve kept interest rates too low. Prices started rising faster than in previous decades. In 1971, President Richard Nixon ended the dollar's link to gold, closing the Bretton Woods system. The dollar became a floating currency, which fueled even higher inflation throughout the 1970s. The Great Inflation ended in the early 1980s. In 1979, Paul Volcker became head of the Federal Reserve and raised interest rates to record highs, reaching nearly 20%. This triggered a deep recession in 1981 to 1982, but it finally broke the cycle of rising prices. By 1982, inflation had fallen to more stable levels. From the early 1980s to 2019, U.S. inflation stayed low and stable, around 2 to 4% per year. This period ended with the COVID-19 pandemic in 2020, which caused massive government spending, supply chain disruptions, and a surge in prices, reaching 40-year highs by 2021 to 2022. High inflation periods are challenging, but history shows that economies can recover. Stay informed, plan carefully, and remember that tough times don't last forever. Together, we can navigate these years and look forward to a more stable future.